Gary. Look, it's great to be here, guys. It's great to be back in Canada for probably the longest stretch in the last 3 years. I'm on a plane 50 weeks a year, every week. So being on the ground here is thrilling. It's great to see so many familiar faces too. Some of you I haven't had a chance to touch base with in the last little while. I want to give you a little bit of a very high-level sense of what I've been seeing over the last 5 years, as my focus has been largely on rest of world. So the experience I've had in the last few years has touched largely on the consumer lending space, but also increasingly a little bit on small business lending. And what has come out of that experience is a sense of the magnitude of the global opportunity when it comes to the transformation that's happening within financial services and opportunities for new business models and for new companies to seize that opportunity. And I'd like to spend a bit of time today talking you through just some very high-level things that I've had a chance to experience over the last little while. So in the last 2 years, I have been a board member and interim CEO of one of the larger alt-fi companies in the world that you probably will never have heard of. So ForFinance is about a 450 million euro a year annual run rate company. It operates in 16 countries. It actually has operations in 17, but lends in 16. It has about 3,500 people around the world. Its heritage was in the short-term high-cost credit business, so in the short-term loan business. And it started in around 2008 when there was that massive transformation towards online lending that happened primarily in Europe to begin with, but also across the rest of the world. However, much like many firms of its kind, and certainly the work that we've been doing very, very hard inside the company over the last year, has been to transform the business away from its reliance on the subprime sector towards a much greater reliance on what we call the aspirational near prime. And there's a reason for that. One is the aspirational near prime is an interesting market opportunity that I'll talk about in the next few minutes. The second is from a regulatory and reputational risk perspective, it is inherently a much more sustainable business. So the business today has its fastest growing business in the area of installment lending, a hybrid really of, kind of, I would say, mid-prime and near prime. There has been a fascinating journey for me personally over the last year as we've sort of worked as a team to transform this company, putting in a brand new tech platform, building a funding and securitization layer below to allow third-party private equity to fund the company. Today, ForFinance is funded by about $500 million of public market bonds. So it operates very much like a public company. It has the same disclosure obligations and so on, but it also has a bunch of covenants it has to live up to. It's been a fascinating kind of experience. But the other thing we've done is launch the first near prime brand for the business. That brand is not visible to the broad public yet. It's in friends and family testing in Scandinavia. It's called Fria. And just to give you a sense of what Fria is like, the time it takes from when you hit the mobile site to when cash is in the bank for a 5,000 euro installment loan, it could be 1 year, 2 years, 3 years, 4 years, the time it takes from when you start the application to cash in bank is 15 minutes. All right? Everything is fully automated, no human touches the process, and frankly, no human should touch the process, not only from acquisition and onboarding, but even through the management of the loan and collections as well. All right? The firm also has a growing credit card portfolio and obviously is looking at the evolution of short-term loans into more sophisticated products such as lines of credit, and it has a point-of-sale lending business now. And it takes deposits. It owns a European passportable bank. It's based in Bulgaria, but it has the ability to passport across Europe. Now, in many respects, this represents a microcosm of one of the fundamental transformations that's happening across this business. And I want to spend a little bit of time just walking you through some of the statistics. So today, ForFinance across the world makes about 23,000 risk decisions every day. Each of those decisions is completed in about data where it's not available. Some of that data is increasingly coming from partners who have proprietary access to transactional data on which we can score the unscorable. 16,500 loans are issued every day, and it takes about 15 minutes for the money to enter the banking system. Now, we don't have full control, of course, of when the money leaves the banking system and ends up in the destination account. That's largely driven by the country, specific infrastructure. But my first call to action for all of you guys here is the payments infrastructure in North America is now significantly behind the rest of the world. Europe is now moving, in effect, to real-time payments, not only within a country, but across borders. This kind of friction-free payments infrastructure is a foundation for all kinds of banking innovation, right? So I know we're working on it here, but every time I come back here and I remember that, oh yeah, we're still sort of in an ACH kind of a business, I cringe a little bit, okay? So call to action number one. About 3.5 million euros of loans are issued every day. This number is growing quickly as, of course, the portfolio shifts from very small loans to larger loans. And the default rates are surprisingly low. In the near-prime and subprime markets, we're seeing somewhere between 7-8% and down to as little as 3-4% arrears rates. So the company is getting quite good at scoring the unscorable. Now, why is this an important kind of measure? There are not very many institutions in the world, by the way, that operate in 16 countries. If you think about banks, they tend to be quite localized, right? And there's a good reason for that. Economies of scale don't translate typically very well for cross-border transactions. Why? Well, there's regulatory heterogeneity amongst other things, but there is an opportunity for Canadian fintechs as they look outside of the Canadian border to a very, very significant transformation that's happening in both the consumer and the business sector. And I'd like to spend a few minutes kind of talking about that. In a sense, I'm talking about the world's financially underserved. Now, we have to be a little bit careful when we look at the notion of the world's financially underserved. I don't mean here the world's chronically poor. There are markets in which the middle class and where wealth is being created on a global basis is accelerating, that there is a highly aspirational, highly bankable community of underbanked people today. And for a number of reasons, which I will get into over the next few minutes, for the first time, there are a confluence of factors that are making it possible to tackle this opportunity in an economically rational manner. Right? There are tools, data science, artificial intelligence, and so on, that are finally kind of allowing us to crack this nut. So call to action number two, I think, for all the smart people in this room, is to take stock of the fact that many of the key technologies that are driving this transformational opportunity are being built here. Toronto and Montreal, for example, are two of the centers of AI development in North America. Two of the strongest centers of AI development in North America. We have a strong banking sector here with years of experience and a stable infrastructure. There's a lot of stuff here from which we can work to build, I think, a great outward-looking business. So let's talk a little bit about the opportunity. There are 2.5 billion, sometimes I hear the word 3 billion, financially underserved in the world. Of that, we believe there is a 700 million person aspirational near-prime audience. Now, what is so interesting about this audience is they're extraordinarily difficult to score, right? They don't have deep credit history or there's not an awful lot of data typically on them, but they are a community that is creating wealth and climbing the credit curve. The question for all of us is, can you identify them, build a relationship with them before anyone else is willing to, and then maintain that relationship by offering them a suite of products that grows with them as they grow, that ultimately actually will see a transformational shift in one of the biggest kind of growth opportunities in the financial services space. This community is made up of two very different types of people. Yes, there is a fast-growing aspirational middle class in emerging markets. I think we all kind of instinctively understand that. But interestingly enough, there is some sort of intellectual thermocline within developed markets as well, where a millennial class simply doesn't want to be served the way historically we have served financial services clients. And they are creating a little bit of a seismic shift. The demands they have for how they want to be served in terms of the granularity and the immediacy and the self-service and all of that stuff is actually creating a tremendous opportunity here. And I spent time over the last 5 years focusing on markets as diverse as Argentina and Mexico, the Dominican Republic, South Africa, all across Western Europe to Eastern Europe, interestingly enough, and in Scandinavia and the Baltics. And I will say that this millennial class is changing everything. And it is one of the most interesting kind of consumer dynamics that we as lenders should not ignore. All right, why, though, are there 2.5 billion people still financially underserved in the world? Well, the reason is it's actually quite hard to serve them. Number one, typically in many markets, whether they be developed or undeveloped, by the way, there's limited traditional bureau data. And many of us have kind of grown up in a world where we trust the bureaus to help us make a lending decision, okay? There isn't that degree of depth in many markets, and there isn't that degree of depth for many individuals. The good news, however, is that new sources of data are opening up, and new methodologies are being made available to us to digest that data and use it to make lending decisions. And I'll talk about some of those business models in a second. The other problem you have is many of these customers require very small tickets, right? The gross revenue for every product you sell to them is going to be tiny. So that implies something about your ability to hold a very high cost of delivery against those customers. Your customer lifetime value for this emerging class for the foreseeable future, call it the first 3 years of their relationship with you, is going to be quite small. Come back to that in a second. It's quite tough to do KYC, and as you all know, KYC requirements are only increasing now as we see increased regulatory scrutiny around AML and so on. The customers are dependent upon the mobile internet to get access to the internet, which means you really have to be mobile first in your thinking. They have limited financial services exposure. Many of them are underbanked, if banked at all. And if you look at it on a global basis, there's quite a heterogeneity of regulatory frameworks around the world. Now, I'm going to come back to regulation in a second, and I would say it would be a mistake to assume, by the way, that emerging markets have less sophisticated regulatory infrastructures than developed markets. I have seen some emerging markets with very interesting forward-looking regulatory frameworks that are not only there to protect the consumers and the end customers of these products and the integrity of the financial system, but actually there to help drive financial services innovation. So, why is now the time to leverage the opportunity, in my opinion? Well, number one, in the last 5 to 10 years, we have seen a significant advance in machine learning, data science, and an ability to essentially increase the width of the aperture of data on which we use to score customers. It used to be a world, remember, where our quants went and built sort of stochastic models and scorecards, and then there was an awful lot of time and effort required to kind of build the scorecard, right? And every time you wanted to change a variable, that would ripple down in a whole bunch of extra work. Those days are over, and they're certainly over in rest of world. Today, and this is a very difficult regulatory issue that I know the regulators are tackling, but today, increasingly, you need to unleash machine learning on the data, and it will give you clues as to which data is predictive. And what's not obvious to us is the data that is predictive, right? Number two, artificial intelligence is critical in reducing the cost of servicing customers, for sure. Again, go back to the For Finance example. No human touches that loan from end to end. You cannot have a customer that's going to deliver a $300 to $400, near-term customer lifetime value if you're servicing them at $1,000 a year. You can't do it. But there is the possibility today to ruthlessly automate the underlying infrastructure in a way that makes this possible. Going back to alternate data, this is a really important point. Increasingly, there are partners who are willing to share highly actionable data with us as fintech professionals. In emerging markets in particular, one of the greatest sources of this pool of data lies inside the telcos. Why? In markets like Africa, for example, where the vast majority of your transactional activity actually occurs on your phone, this is actionable credit data. And the telcos, the major telcos in the world, all understand this now. And they are actively partnering to either facilitate or, warning, build their own lending practices. So as fintech professionals, it's critical that we build these relationships, seek proprietary data, but by the way, also get access to customers at a much lower cost of acquisition. The mobile internet is everywhere. Whether, we in Canada are, over-connected to the internet. I think we have probably more than one device per person now. I think the average is. The reality is almost everybody in the world that is in the community of people we seek to serve, almost everyone is connected now. And they are connected on increasingly sophisticated devices on which you can deliver a very high degree of functionality and capability. Also now, in a number of markets, you can't lend unless you actually are either a bank or plugged into the banking infrastructure. Banks are looking outwards, right? The rise, we're moved really from a world where credit as a service has been, growing, I think, in the last 5 years or so, to now environments where banking as a service is beginning to become evident. You see this a lot in Europe, for example. There are banking institutions that are essentially opening up their platforms to third parties to allow innovative fintech players to plug into the underlying infrastructure and ride the kind of regulatory wave. Very, very important stuff also is open banking, the degree to which non-banks can get access to transactional data on which to score customers and to make predictive decisions about customers' cash flows, also opening up a tremendous opportunity, I think, for non-bank service providers. And even though there is regulatory heterogeneity, I would say there is increasing regulatory stability. And I'm going to come back and talk about regulation in the next couple of minutes. I've been positively surprised by the regulatory sophistication of many of the markets in which we have worked. I've also seen situations where regulations become a political football, right? And where banking regulation in particular and lending regulation becomes a tool of a party to gain power, right? And it's very important for us, by the way, as participants in the financial services community, to build deep and long-lasting relationships with both regulators and legislators so that there is an intimate understanding of what our needs are, right? And how we, in turn, can power the economy. So let's spend a bit of time talking about regulatory frameworks, because I think this is actually one of the key things that we as financial executives come up against all the time. Look, there are a wide range of regulatory approaches around the world. Canada's not bad. I wouldn't say it's state of the art, but in many respects, other regulators come here to talk to our regulators to gain insight and knowledge. There are a number of requirements that a regulatory body has. Number one, it needs to guard the safety, security, and stability of the financial services industry, right? That is absolutely critical. We must maintain the trust in the underlying infrastructure. Number two, we must ensure adequate consumer protection. I think that is a given, right? That's what regulators do. That's what they wake up every morning coming to work to do. And in my experience, by the way, most regulators I have worked with around the world, from South Africa to South America to even Eastern Europe, they take this responsibility very seriously. And most of them have a degree of independence from the political influence. However, in particular now, as we are seeing a transformation within financial services, and as we are seeing the opportunity for the first time to serve a significant portion of this 2.5 billion underserved, regulation plays a role in also driving and enabling financial innovation, and this is key. There are regulatory infrastructures in the world that are actually deliberately allowing sandboxing of new ideas. And they know that that is a valuable investment to make in the financial services ecosystem because it will pay dividends later. That kind of ingenuity and innovation will be critical to driving increased consumer and small business opportunities going forward. And I think, so call to action number three is really, even here in Canada, we need to work to ensure that our regulators are thinking in this way, right? Are creating opportunities in a safe space for us to innovate, while at the same time allowing for the enforcement and stability and security at scale. Opportunities for growth that are coming out of some of the most exciting fintech markets in the world, by the way, are being driven by regulation. Not being driven by them, but they're being enabled, I would say, by regulation. And we don't punch really our weight in the world yet in terms of fintech innovation here. I know there's some exciting stuff happening in Canada, but the stats are quite disheartening at the moment. I think there's a recent KPMG study that came out, sorry to mention KPMG and Deloitte, but I'm going to do it anyway, that talked about the kind of top 100, both in terms of value and influence and so on, fintechs in the world. 20 of those come from North America, 2 of those come from Canada. 2 of those come from Canada. 80 of them come from the rest of the world. If you were to do a similar study around basic tech, you know, I don't know, the internet, online, whatever it happened to be, you would see a very different ratio. So something is happening in financial innovation. We are hitting under our weight. So call to action number 3 is there's a huge opportunity out there, guys. It's time for us to bring a great deal of Canadian expertise and capability to bear on this. And I'm going to talk about that in the next couple of minutes. An open and engaged dialogue with regulators absolutely matters. The number of times I've gone to a regulator somewhere in the world and they've said, you know, this is the first time industry has come proactively and sat down with us and asked, how can we work together, blows my mind. Regulators want to talk to you. And if you're going into a new market, I would suggest that is one of the first conversations you need to have. Because if you are seen as a solution to the problem, or an enabling technology that helps deliver the aspirations of a nation, you will gain tailwinds. If not, you will have headwinds. And trust me, it's not an easy place to be. Time kills, though. The rate at which fintech is innovating around the world right now is staggering, and it's only getting faster. So we don't have a lot of time to take some of the great capability we have in this country and leverage it so that we can ride this opportunity. We don't have a lot of time. Far more innovation is happening today outside of our borders than is happening inside our borders, and that has to change. I mean, we are going to be an IP-driven country going forward, right? All right, so I want to just touch on 4 quick companies that I think are just interesting. They're by no means an exhaustive list, and by the way, I just picked these kind of semi at random. There's probably 100 companies I track that I think are really interesting. The first of these is in Africa. It's called Better Finance. Better Finance is building a mobile digital bank for Africa. Now, why is Africa interesting? It turns out I think Africa is the 2nd fastest growing financial services marketplace in the world, and it is one of the most profitable financial services marketplaces in the world. Right? In North America, we're kind of arguing over this, pieces of the pie that really aren't growing significantly. In Africa, that pie is growing incredibly quickly. And with stable regulation and other things powering it, it's making it possible for companies to really take advantage of it. So Better, is one of the more sophisticated digital financial services experiences you're going to see anywhere in the world. Trove is also, I think, an interesting company in the sense that Trove is trying to rethink insurance. So today, we tend to all, carry insurance of various kinds, right? And it's largely black box insurance. I pay a significant kind of black box amount every month to insure my home and belongings, to insure my health, to insure my life, to do all of these sorts of things, right? And I don't really understand how they came up with that calculation, and I probably can't do very much to change it, right? Trove says, forget all of that. And Trove is really largely designed for millennials who want to insure the things they love. Trove says, okay, I'm going to allow you to insure individual objects, and I'm going to allow you to insure them for short periods of time. So if the things in life I care about are my very expensive new MacBook Pro, my bike, and maybe some high-end piece of musical equipment I bought, I can insure just those items, and I can insure them just for short periods of time for a few dollars a day. Watch out, right? Whether it's this kind of thing for goods or driving or whatever, the increase in granularity is what millennials are looking for. Tala exclusively, almost exclusively, looks at cell phone data to make lending decisions in Africa, and increasingly actually in South America now too. Just cell phone data, right? Your SMS messages, they've got some carrier relationships as well, but they're deeply integrated on the phone, and they're looking at your behavior, your location, a bunch of other things, and they're making spookily accurate lending decisions without any bureau data behind the scenes. It's a little company that's based in California. Uala is an attempt to bank the underbanked in Argentina. It's basically a little prepaid card that is your bank account. There is no bank account behind the scenes. It's just an app. But it operates in the same way that a bank account would operate. You can use it to pay for things. You can get deposits to it. And yet it's not a bank. Very simple, lightweight infrastructure that is growing like crazy. Lastly, Nubida is a Central African small business lender that literally sends out a little simple SME app to help companies manage their cash flow. And out of the back end, it gains insights into which of those companies they can provide lending to, and the app unlocks lending for the small businesses. And these are for micro small businesses. There's almost no infrastructure behind this company. It's tiny. Everything is completely mobile. So very quick look at the sort of some ideas of the landscape. I would encourage all of you to spend some time looking at what's going on out there. It's very exciting, actually, and very interesting. So in closing, I want to talk about Canada a little bit. Now, I haven't really been focused here. As I said, I've spent almost every week on a plane. I never thought, by the way, I would achieve, and you never want to do this, please, achieve top-tier status on 3 different airlines in the same year. And I never thought, if you'd asked me, by the way, if I would ever reach top-tier status on Aeroflot, I would have laughed at you. But the reality is there's an awful lot going on outside of our borders. But understand something about what we have going for us here. Canada is a tremendous country. We have a strong, rich, multicultural kind of milieu of people from which to build great ideas, many of whom have arrived in this country bringing ideas from afar. We have some of the strongest academic foundations in artificial intelligence, machine learning, and so on. A lot of the people, by the way, that are driving Google's and even Apple's AIs, they came out of the Toronto School. So we have technology, we have a superb banking framework here with very large financial institutions that are very wealthy, that can help power innovation. And I would say for their own good, they really should get involved in powering innovation here. And Canadians are well liked and well respected on the global stage. We can walk in almost anywhere in the world and we are positively perceived. So this mix of this kind of global awareness, this kind of academic power and sophistication, the strength of our banking system already, the capital available, and by the way, if anyone ever complains to me about not being able to raise money in Canada, I will tell you that I know a lot of great Canadian VCs that are starving for great ideas and they wish they could invest here in Canada. You just have to bring them the great ideas. And finally, Canadians are a great brand. There's a reason why my son, who's now traveling in Southeast Asia, has a big Canadian sticker on the back of his backpack. Right? So I suggest all of us take a look at this opportunity and look at the strengths that we have as a nation and go and seize it, because the time is now. Thanks very much. Hey.